Hey everyone, it is Kyron here from No BS Crypto, bringing you a brand new video. Today is the fundamental breakdown of a project called Aleph Zero. Now, this is the fundamental breakdown of the project. I did do at least a high-level breakdown earlier last week, and if you wanted to see that video, please click the top right-hand corner of your screen now. That's part one, and as I said, this is part two. So for those of you who don't know, every single week I'm going to be making one of these videos, so a fundamental breakdown plus a separate technical breakdown of one project every single week. And then every 2 weeks, I'll be breaking down a more well-known project, Near Protocol, for example, Cardano, Ethereum, things like that on a much more deeper technical level that you don't actually end up seeing, at least you're able to still understand it, plus then breaking down the ecosystem from there. But these ones are more so the low market cap sort of projects, so you guys can understand them fundamentally. Now, I do rate this project, I do rate Aleph Zero on a scale of 1 to 10 in that first video, so if you wanted to see what I rate it, please go ahead and watch that. But as for now, let's dive into the fundamentals. Now, one important thing I wanted to mention to you guys is I've recorded this video about 3 times now, and every single time it does go for at least 45 minutes. So what I'm going to try to do is prevent myself from actually explaining what the hell, for example, the next few slides will be, Defensibility, Memetics, USP, and actually just state what I think about it. Now, if you are someone that is learning and you want to actually understand what the hell Memetics is, for example, then I'm coming out with a course, hopefully within the next 6 months. It was supposed to already be here, but a few things have prevented that. So if you did want to understand this on a lot more comprehensive setting, if you wanted to really get into the nitty-gritty of it all, please wait for that. I'll be explaining this all in great detail then. Unfortunately, I don't have any sort of service to provide to you now, but if you go ahead and watch my previous videos, I do actually explain it in all of those. They're just quite long. So first of all, I like to break projects down from face value. What is their logo, what is their name, and what is the ticker? Quite obviously, ticker isn't that important. It's just what identifies the project, AZERO, nice and simple. The name Aleph Zero has a bit of a mathematical meaning. That's because it is a highly mathematical project. It is quite complex. So this is actually a mathematical term, and the logo, kind of like Algorand's, nice, simple, but I quite like it. Okay. Now, why is this important? Well, a recent supporter of mine actually said to me that, I used to talk about this in my previous videos, and he said, look, I used to, hear you say that, never really understand what it meant. And with the recent Elrond change to Multiverse X, he actually said to himself, and he told me that he actually felt like selling a bit of his position because he didn't really align with the new style of the project. And this is kind of what I've been saying to people is, for example, if Apple rebranded to, Computer Co. and the logo changed from a nice Apple logo to a guy doing this, you're going to be more incentivized to sell any sort of shares or position in that project. And this doesn't really, this isn't sort of just with rebranding. This is also with the project itself. If the project itself doesn't invite you to want to look into it, you're not going to want to look into it. I don't look into meme coins because I can quickly and easily tell they're a meme coin or they're going to be full of shit. The same thing with a good project, okay? So it might seem very, very face value to a lot of you guys, but I'm telling you right now, it is important. So I'll give these guys a nice tick here. So as you can tell, next we're looking at Memetics. Now, I'm going to briefly explain it. I know I said I wasn't going to do that a second ago, but let me quickly explain what Memetics is. Essentially, it's just like a meme, okay? How propagation happens with anything in life. We know memes on the internet, okay? That's just pretty much how something propagates. So a meme is relatable. A meme is something you look at and go, wow, I can relate to that. That's actually kind of funny. And you send it to your friend, you send it to Alice. Alice sends it to Bob and Dave, and then so on and so forth. And it just multiplies by 2 every time. And if you know crypto, a lot of projects use this sort of propagation method, okay? So Memetics is very, very important because it's the meme that makes people go, wow, this project is really, really interesting, okay? It doesn't have to be a USP necessarily, but it has to be a wow factor. For example, Cardano, right? Cardano has 480,000 TPS, fastest proof of work blockchain. That was a meme. That was like, wow. And at the time, that just spread like wildfire, okay? It was theoretical, still is theoretical. However, it got people interested. It got what I call dumb money, people who, degenerates. 90% of the space is filled up with these degenerates, right? 10% is what I call smart money, people that look into projects such as yourself, such as me, and we can identify the actual real use case, okay? The real USP of a project. However, you know, Aleph Zero actually being a privacy-enhanced public layer 1 blockchain, that is kind of their USP. Their USP, in my opinion, also the DAG plays into that. The DAG and the consensus algorithm is quite awesome. It's unique, but it's not necessarily novel in the sense it hasn't been done before. However, the use of SMPCs and ZKPs together is actually, you know, pretty much the meme in this sense. So, are degens, are 90% of the population going to be like, wow, this is a Cardano moment. Can't wait. ZKP, SMPCs, wow. No. So you got to remember that. However, it is a fast, privacy-enhanced blockchain. We look at, you know, other blockchains like Mina, you know, 22 TPS, you know, Zcash, 6 TPS, Monero, 1700 TPS. These guys are proposing 86,000 TPS or thereabouts, okay? It's quite impressive, really, and that's a meme in itself. But is that going to be enough for the degen, for that 90% to go, holy crap, am I going to want to buy this? Like, you know, throw them your money. You know what I mean? No, I don't think so. That's just my honest opinion. So in Memetics, I'm going to give them probably about a 5.5 out of 10 because it's great for people like us. It's awesome, but is it going to be that quick, sort of relatable sort of project for the degenerates? No. And it's unfortunate we have to think like this. It's unfortunate we have to take into consideration people who just want to throw their money away. But honestly, guys, let's just cut the bullshit. That's how we make our money, okay? So it has to be a factor. Unfortunately, the technology is fantastic, okay? Spoiler alert. But we have to take this into consideration. Now, more or less in the same regard, we have defensibility and USP. So defensibility, what is protecting this project from being outcompeted? What's preventing this project from another project, for example, just forking it, you know? So it comes down to two things. One, in my opinion, is the USP, so the unique selling point, how difficult is it to replicate? And also another thing is also the token as well. So the token is obviously creates an economy. How inbuilt, how well integrated is the token into the actual project itself. So overall, if I'm going to give these guys a rating, it's going to be a B, which is, I'd probably say an 8 out of 10. It's quite good. Again, I kind of want to go into detail with this, but I just don't want this video going for too long. It comes down to the token. So the token we'll talk about in a second. The token is just a regular utility token, more or less, cutting a long story short. So that's just an average, you know, C. But the USP is very, very good for these guys. It's going to be hard to replicate this project. It's very mathematical. As I said to you before, it's very technical. And in that sense, I think there is quite a bit of defensibility here, okay? Now, this is going to be something a lot of you probably want to look at as well, is CoinMarketCap and CoinGecko statistics. Now, we're looking at the now versus then statistics, okay? So this isn't that important in predicting anything as of right now, but you know, towards the end of the video, we're going to look at predicting the future, and this is where these sort of stats will come into play. But first of all, right now, at least of recording this video, the current price is 94 cents. Again, not much information there. Market cap, a nice 195 million, gets a green tick, which means I'm pretty much saying that's good because a lot of you guys are going to be micro cap fiends. A lot of you guys are going to be in the large cap section. So this is more of a mid cap, kind of makes everyone happy. If you want to invest, if you kind of want to be on the riskier side, if you're a large cap guy, perfect. If you want to take a bit of a safer gamble as a market cap fiend, this will be great for you as well. So 24-hour trading volume is about 200x difference at 734k. Yellow tick, not that great, but due to current sentiment, that's okay. We have circulating supply currently 204 million. Yellow tick because yes, that's great if that was the max supply, but it's not. So we're going to talk about that soon. Price is currently $3.09. That's only a 3x difference. So then is pretty much what it was at its all-time high. So we're only at 3x down, more or less, which is actually quite good. That's pretty much what, a 66% decrease in price, which is pretty good considering we're going to see in a second most of the tokens are in hands of third parties, and also the current sentiment as well. Most of these projects in this similar market cap range, or as you can see here, it was 519 million, have dropped at least 90% in price, so quite good. Now, again, market cap, the reason it has 2 stars is because I had to figure that out with the circulating supply times the price, and at the same time, the circulating supply circulating supply, was quite rough, because you'll see in a second the vesting schedule isn't exact, but more or less that was basically about where it was, okay? And I know for a fact what the 24-hour trading volume was, thanks to Lunar Crush, so that was about a 60x difference between the market cap and trading volume, which I consider quite good, quite healthy, okay? And usually trading volume comes from the ecosystem, okay? And back then they didn't really have an ecosystem. They still don't now, because they only have just spawned. They've just recently opened up to public validators, so congratulations, guys. So you can't really mark them down there, but at the same time, very, very healthy for how early in the project it is. All right, and as you can see, the markets. Everyone can see where the markets are on CoinMarketCap, CoinGecko, so why am I showing this? Well, let me explain. First of all, we can buy this on KuCoin, Get.io, Huobi, MXC, whatever that is, and a few other smaller ones, okay? But the main two important ones I want you guys to remember is the ones that show proof of reserve, so that's KuCoin and Huobi, okay? So if I was going to suggest anyone purchase this coin, well, financial advice, of course, it would be ones that list their proof of reserves, preferably one that is higher up in the rankings, has more trading volume and things like that, so therefore it would be KuCoin, okay? Now, why is any of this important? Well, I want to let you guys know, the more exchanges a project lists, so say this listed 20 or 100 exchanges, the better in some circumstances, meaning if there was an important update, of course, the project is going to be in the eyes of more people. Therefore, the particular event will actually be able to reflect better in terms of price if it's obviously in the eyes of more people, okay? If it was a mainnet launch, for example, and it was quite a significant project, if it was on Binance, Coinbase, Kraken, and all that sort of exchanges, of course, it might receive a 30x, where if it's on exchanges like this, it might only receive a 10x, because there's less wallets, less people on these exchanges. Alternatively, it is a double-edged sword, because the less exchanges there is, in this case, obviously, if Binance lists them, there's going to be a huge jump in price very, very quickly. This is what usually happens. And therefore, people are going to buy in, and therefore, anyone in the token nice and early is going to receive this amazing jump in price, and then you can possibly ladder sell and reinvest or do whatever you want to do at that point. So in saying that, there's two sort of possible alternatives in this situation. Now, with the market cap only being $200 million, and well, I say only, that's quite a lot, and remember, it was 500 million, and being on this few exchanges, that's actually quite a bullish thing in my eyes, because it shows there's a lot of people interested in the project, considering there's not many exchanges listing it, okay? So in my eyes, if I'm going to rate this, I've got to kind of cater again to two sides of the coin, but I'd probably give it about an 8 out of 10. So the token, as I said to you earlier, it's a typical utility token. We can call it a coin because it's its own network. Again, ticker is AZERO, and I'm just going to read to you guys some of the utility used in this project, okay? Well, for the token. So the first is transaction fees. That's paying for transactions on the network, like gas, for example. This is simply like smart contract transactions and things of that nature. Then we have governance voting processes. So that's just staking the token, allowing the user to vote in governance. Obviously, you can then control the direction of the network. Number 3 is validator node staking. So stake the token to become a validator. Alternatively, you can also nominate to validators as well through the same sort of staking mechanism, okay? So discounts on decentralized exchange swap fees. The name says it all. Collateral for wrapped assets and liminal. So that's pretty much, you're able to essentially use the token itself, so AZERO. So you might, for example, lock up 16,000 AZERO as collateral and received one wrapped BTC, for example. So there's that as well, and that's all through liminal, okay? Number 6 is discount on fees for asset wrapping and bridging on liminal. So the same sort of thing, you just receive discounted fees for using the liminal bridge, okay? So that's pretty much it. Overall, guys, it's nothing fancy apart from those last 3 I mentioned. They're just kind of really niche specific use cases. In my opinion, it's just going to get a 5 out of 10 here. But I want you to remember that as the network does develop, as the network grows, the use cases, the utility will therefore increase, okay? So just remember, these guys have just started, so it wouldn't surprise me in 1, 2, 3, or 4 years' time, this list does dramatically increase. Alrighty, guys, next we have use cases. So these are the things that the project has listed on their website that they're looking to implement, whether it's now or, in the future, in the roadmap, okay? So I want to let you all know, projects will mention a whole heap of use cases and never actually act on them because they're either too difficult to actually implement, or they're wishful thinking, or the project dies off, or funding is reduced, things like that. You never really know, but I want to let you know, every time you see use cases on a project's website, take it with a grain of salt, unless they're actively working on it. It's on the testnet, on the mainnet, etc. Okay, so Aleph Zero has quite a large list of use cases. Okay, I've picked 7, and the 7 I've picked have been vetted through the use of 2 variables. The first variable is, can it be implemented within the next 5 years? And the second is, does it actually use the privacy-centric nature of Aleph Zero? There's no point in me saying, oh, Aleph Zero has actually decided to optimize transaction speeds and be used as a payments network, when I can tell you right now there are like 6 or 7 other payments networks out there that are even smaller market cap that do a better job, even right now. Okay, so it has to be actually used for what the network is. Anyone that says there's going to be 1 or 2 blockchains to rule them all are absolutely kidding themselves and are joking to you. Okay, so with that being said, the 7 I've picked is 1, the common wallet; 2, supply chain management; 3, notary signatory; 4, securing DNS; 5 is transparent public document access; 6, automatic tax payments; and 7, and this one might not be out within the next 5 or so years, is IoT. Okay, so again, the others seem great, but I've chosen these based on those 2 variables. And if I'm going to rate it out of 10, I'd have to probably give it a 7.5. The reason why is because it's a brand new network. A lot of these will either develop and fall off or come to fruition. I'm not too sure, but there's quite a lot to bring in, and it's a very, very new project, so I have to kind of be mindful of that. All right, guys, one of my favorite parts of the video, the distribution. Okay, now obviously this isn't the distribution chart on the website. I created this to help you guys visualize it a bit better, with the colors obviously meaning something. So in total here, the total emissions of the vesting of the distribution is 300 million tokens. Now the network itself, the supply is unlimited. It will never end. There'll be constantly new tokens added, so it's indefinite, and there's no obviously cap in that case. Okay, so these are just the distribution tokens to the people or the entities that got into any sort of specific rounds. Okay, so once these vest, it'll only ever be inflation. Okay, but we'll look at the vesting schedule in a second. So let me explain it to you. So I've color-coded them. Blue obviously is neutral. That's the foundation. Okay, so 23%. Now, they've stated that this is going to be for research and development, marketing operations, as well as the ecosystem incentives and other operational expenses. Okay. They've also mentioned that a large portion of the foundation supply will be used in the ecosystem fund, which is really important for bringing in developers, growing the ecosystem, and in future, the community will also be able to help with non-core spendings of the treasury. So it will be decentralized, or at least go through a governance sort of procedure in the future, which is good. Now, second, which you can't see on the screen, is green. Green means good, and that's pretty much if any of this were in the hands of people who I deem don't have the cheapest tokens, or don't have the biggest bags with the cheapest tokens, who I like to call third parties. So red is obviously, it goes from dark to light red, and that's pretty much because I deem dark red is the most dangerous. Okay, but let's just go through it. So the team have 10%, which is the team. Now the pre-seed have 17% and the seed have 17%. So the pre-seed, obviously very, very early investors. Seed round being there was 2 strategic rounds here, I believe, A and B rounds. So there's a different kind of investors involved in that. We'll look at the quality of those in a second. We also have early community. Now, I probably made these guys a little bit too red. They probably should have been a bit lighter. Regardless, just community rounds here. So public and public pre-sale. Okay, so in my opinion, that's kind of bad because 77% of the total distribution is in the hands of these third parties. Again, hold the biggest bags with the cheapest tokens, or just hold cheap tokens. They might be wondering, Kyron, how cheap are these tokens? Okay, let me tell you how cheap the tokens are. The team obviously got free tokens. It's just free tokens, right? It is what it is. There's nothing really that bad there, other than the fact that they have large quantities, and if they really wanted to, if they knew they're obviously insiders, if the project's going to tank, they're going to sell. Now, pre-seed at 4 cents a token. So these guys are currently 25x up, thereabouts. We have seed, they got in at 5.7 cents, so they're at 17.5x gain increase. Early community, 7 cents, so they're about 15x up. and we have public, which got in at 10 cents. So these guys are about 10x up. And then we have the public pre-sale, which I'm kind of unsure about, but I think they would have gotten about 10 cents or possibly even 7 cents a token. Now, in a second in the vesting, I'm going to actually show you guys. I'm going to change the community rounds to green because I believe that they're normally capped. Okay, people are normally capped when they're community investors, because the token obviously doesn't want to have the same situation with investors where, okay, if I'm a millionaire and I believe in the project, I'm going to buy all the tokens in, say, early community round, which is going to screw everyone else over, for example. So there's normally a cap of $1,000, $2,000, $3,000, okay? Now, in my opinion, come 2025, guys, be very, very careful, at least looking at this chart how it is now, because this will eventually be how all the tokens are vested. So that's why I've color-coded them red, and that's why it's important to look at it like this, okay? Come 2025, you can expect at least the weak hands to sell off and the investors to also sell off. But we're going to get into the investors in a second because there's a lot more to divulge other than just saying they're bad, okay? Because it goes into the quality of the investors and how early or how mature the actual the venture capitalists are as well, okay, guys? So make sure you let us sell come the next bull market, because trust me, if you're predicting the next day is the all-time high of the project or the market, you wake up and the project's 20% down, you can blame these guys, okay? Because they will beat you most of the time if they're venture capitalists. You don't want to be holding your bag, and you definitely want to be getting the biggest bang for your buck. So if you're watching this in the future, remember, do not hold your tokens. Ladder sell, not financial advice. Okay, guys, the vesting schedule. We should never make an assumption about the distribution unless we first check this guy out. So a few stats. So every single year, 30 million tokens will be entered into circulation. As I said to you before, that is pretty much going to be indefinitely. Okay, so it will happen every single year, no matter what. And there's no cap supply. So it'll just keep going up like Ethereum currently is. However, there's no current burn mechanism in place, although Aleph Zero have actually mentioned that they're looking to actually implement one. And my suggestion to them is you should. Obviously, degens love the word burn, even though they don't understand the implications of such. But moreover, I think it's obviously from a technical point of view, a very, very good thing to implement. You can't just consider a burn mechanism in terms of validators staking or nominators staking their tokens. I think there needs to be a bit more of an incentive there because people are just going to go, holy shit, my tokens are just losing value year on year on year, okay? In saying that as well, technically it's 10% inflation per year if you look at the initial distribution, okay? However, obviously, as there is more tokens in circulation every single year, that 10% will slowly decrease. Nevertheless, it is 30 million tokens. My opinion, that is not good because there's no real mechanism to keep the token within the project besides staking. But again, these guys are very, very new, so let's just see what other sort of ideas they adopt to keep people either staking their token for a period of time, what are the slashing mechanisms that come into it, but more importantly, if there's a burn mechanism and how that's implemented, okay? First of all, the vesting schedule, by the way, guys, is really, really awesome. But in terms of what is the current circulation right now? What are those entities I showed you before? How much of the tokens do they currently hold? Well, here's the chart, okay? This is what currently is in circulation in terms of these entities. So as you can see, I've made the community green, as I said to you before, because ultimately we're all a team, okay? We're fighting against the big bad wolves, against the guys in red. So the guys in red are obviously still there because, again, they can just literally dump their tokens whenever they want. Now, one frightening thing is they hold about 46.5% of the current circulation. Remember, guys, this is in circulation right now. Any of these people can just dump their tokens right now. So 46.5% is a very, very scary thing in my opinion, even though the community holds it roughly about 45.4%, okay? So it's more or less half-half, but you don't want to be seeing half-half, okay? Again, this doesn't obviously count for the tokens that have been emitted into circulation via, the inflation. So in saying that, guys, I'm probably going to have to give this probably a 5 out of 10 if I'm being honest. It's not horrible, it's not great, so mid-range. So the investors, again, these guys are literally designed to make money for their investors, okay? These are venture capital funds. Investors invest in them and they entrust them to make money for them, okay? So keep in mind, these guys are designed to sell. They're in to sell, okay? So the reason these are red is because they're two reasons. They're either crypto-specific VC funds, which means they're going to be more inclined to sell their tokens early on, okay? And probably also because they're a lot more immature compared to some of the investors that are actually multi-industry, which we'll touch on in a second. So the yellow I color code as average. They're not bad. Red is bad. These guys are okay, average. And I've marked the very, very best as Supernova Invest. Now, the reason I've marked them as the best on this list is because they have had the largest venture capital round out of all of these guys, and they're involved in the most amount of industry out of any of these guys. So the venture fund that they actually had was about 145 million pounds, so quite a lot of money. So lots of investors obviously trust them with their funds, and they've made about 51 investments, 2 recorded exits as of Crunchbase statistics, and the 5, I believe, industries they're involved in is life science, energy and environment industry, microelectronics, and digital. So again, guys, this list, teeny, tiny, and as you can see, not very good according to my standards because, again, we're looking for multi-industry, very experienced investors. And as far as I'm concerned, these guys are the best in this case. So this list out of 10 would be a 3.5. Next, guys, we have the team, the most important part of a project, hands down, bar none. Now, why is it the most important? Well, let's use the analogy of a ship or a vessel, for example. So if you have a quality ship, a really, really nice new ship, but you have a really inexperienced team come on board and try to navigate that ship, they're most likely going to crash it, sink it, whatever else, okay? So it's important that we identify that the crew, aka the founders of the project, are experienced and can work well together. Okay, so there's 6 qualities I like to look for. Obviously, the list does go on. It's quite vast, but these are the 6 I think that you and everyone should at least know. Okay, so number 1 is quality and vast education for their role. You don't want a doctor coming on as a CTO, plain and simple. Next is same industry experience. Hopefully, they've worked in crypto before, okay, or at least if they are an editor, for example. A very loose example, you want them to obviously have been an editor previously, okay? Now, number 3 is industry experience that needs to be vast. So, hopefully working as a CTO or a developer in that regard for Google, IBM, all these different sort of tech companies, okay? Number 4 is previous collaborations with colleagues, just like you have in FIFA, for example, or any sort of sporting game. If obviously the players come from the same nation or the same club, they're going to work better together. Same thing applies here, okay? Number 5 is frequently active in the crypto community. Now, we can use Twitter, for example, scroll down on Twitter and find their first tweet or when they started tweeting about crypto. It's methodical, it's boring, yes, but I do it for you, don't worry. And that way we can kind of gauge how well these individuals kind of are in the crypto community. Are they sort of here for the hype and then they're going to go? That indicates sort of like they've just started tweeting when the protocol started. Or have they been here from 2011, 2015, 2016, and they've been quite active in talking to people and growing their own sort of community, okay? So that's kind of important in my eyes. And when I see someone that's been involved in the space for a long time, I just feel more aligned with them, if that makes sense. So number 6 is open to AMAs and technical discussions. If they're the team, they need to be talking about their project. They need to be getting out there, and hopefully if they have good marketing advisors, they'd be doing this already, okay? AMAs, Twitter Spaces, talking with people like myself, interviews, things like that, and teaching people about their project, okay? Breaking down complicated topics, questions, into kind of high-level overviews. The total team members of Aleph Zero has 41 people, at least of right now, and actually they've got quite a few PhDs in the actual team, in the sub-team themselves, okay? So technical project, yes, but a lot of experienced people, okay? And we're going to get to the founders in just a minute. And I want to just mention, actually, the team this is the entire team, have worked at other big companies like Google, IBM, Uber, Stellar, and ING Bank. So quite a vast amount of, experience in really, really well-known and established companies, okay? Now, as I said, there's 4 co-founders. So we have Adam, Matthew, Antonio over here, and Mikkel. Now, I've recorded this section of the video God knows how many times, 1,000 times, and they have so much experience themselves. They pretty much all have PhDs. that I don't even want to begin getting into it again. So what I'm going to do is list on the screen here all of the different sort of aspects, all of the history experience of each individual person. So you guys can just simply press the space bar on your computer and read them yourself. Now, I'm going to highlight green, well, at least different colors for the synergies between each actual co-founder, because they've all worked together or studied together at some place at some point in time. So they've all got previous history, okay? Now we'll start with Adam, Matthew, Mikhail, and Antony. So again, quick, I'm sorry guys, but just pause the video and read that, because honestly, there is so much to explain there. I don't want this video going for 3 hours. However, overall, they've won an international maths competition, so very, very switched on. Again, it's a highly mathematical project, and as you could tell, they've all pretty much got some sort of PhD, or they've been studying, or they've pretty much got a PhD in mathematics each, okay? So in saying that, these guys are well and truly, they've got the education to back themselves up. What they do lack is crypto native experience. They do lack a little bit in that. Apart from Matthew, he's worked at one other crypto specific project before. And as you know, I think it's Mikhail and Antony, they've actually worked at the Blockchain Association before. So they do have blockchain experience, but in terms of crypto native experience, kind of lacking a bit there. And because they're lacking in experience in the sector, I have rated them overall an 8 out of 10. Okay, the founders, the co-founders. I do feel a bit guilty because you kind of have to start somewhere. Like myself, I should be able to attest to that. You have to start somewhere, and I do feel a little bit guilty in marking them down on that. However, I do have to mark them on face value, and that's why they're an 8 out of 10, not a 10 out of 10. Otherwise, if they had, years and years of experience in this sector, that'd be easily a 10. All right, as promised, here is my prediction for 2025. But first, let me tell you how the hell I got here. So, first of all, you're going to see some of the previously mentioned stats. The then, the now, so the all-time high previously, the current statistics, and future, okay? But there's a few variables that go into actually predicting a project's future price. And what I like to do is actually get the now, so the current price of 94 cents with the current circulating supply, work out the circulating supply it will be at the top of the next bull market, okay, or at least around there, so mid-2025, which will be 436 million tokens. Then I actually divide the circulating supply, so that's more or less a 2x difference, okay? So then I'll divide the current price by 2, which is about 47 cents or so. And then I'll work out the market cap, aka the demand or adoption, for example. And then what I'll do is I'll multiply the new now price, which is about 47 cents, by how much I think the market cap will increase from the previous all-time high. Again, adoption. Now, typically for the more established projects, your top 50, top 100 projects, I'll go ahead and slap a 2x on that, on the all-time high, and assume that that's at least the baseline minimum for a quality project. Obviously, projects are going to die, but I'll slap a 2x and say, all right, well, for example, Elrond, for example, I really do believe in those projects, so I'm going to safely say a 2x increase from the all-time high, 2x increase in adoption is safe to assume within about a 4-year period. Now, for a mid to low cap project, this is kind of in the air. Again, it depends on the defensibility, it depends on the memetics and things like that, and lots of different things can go into consideration here. But again, my prediction is going to be a conservative one, and let's just talk about what I kind of do. So as I said, I multiply everything by the adoption. So, what is the market cap going to be at the the next all-time high? So, a few variables that go into it. I've got some on the screen, but let me list them. Well, it's a pretty much never-ending list, but let me list the most important ones. So, does it include, major roadmap events? Is there anything major happening between now and the mid-2025? Strategic partnerships. Obviously, a protocol, a project can be really, really awesome as a foundation, but as we're seeing with projects like Near Protocol, with Octopus, for example, they can actually come in and actually make the base layer or the project really, really good. Even better, should I say. So, partnerships are really, really important here, guys. Next is the current wallets and active wallets versus how fast they're increasing. So active, okay, you could have a lot of wallets, okay, dormant wallets, but how many active wallets are there, and are they increasing? That's a great indication of demand. Next is ecosystem funding rounds to incentivize native development. So do they have an ecosystem funding round? Yes, they do. If you remember from the distribution in the foundation, they actually have listed it is going to be used for ecosystem funding rounds. This is kind of the primary use case for the foundation nowadays, but regardless, we need to build native dApps on the actual project. Enough of this porting them all over or copying the contracts onto the project from, for example, Uniswap. We need actual real native dApps to be created on the ecosystem, and that's also a great indication developers are interested in the project. And next, the protocol functions correctly and has been stress tested. Of course, you don't want a project that says these amazing things and has never been stress tested or is still in testnet phase. We need to see evidence, okay? And as I said, the list can go on and on. So a conservative increase here would be a 4x from its all-time high, meaning we would take the market cap from then, multiply that by 4, so that'd be about 2 billion, okay? And then we'd work out the current price based off, remember, dividing the circulating supply and then finding the new price. So 47 cents multiplied by the difference between the market cap then and future. So that'd be about that times by the difference between that and the new market cap, okay? So, but again, guys, that's a 4x increase in terms of the market cap. Will that happen? Not too sure. In my opinion, it's difficult to tell because the memetics really do make the difference here. Again, Cardano had a massive 30x in 3 months, okay? Who would have predicted that? No one, okay? So this really comes down to how much of that dumb money, that 90% of the crypto population is going to be putting their money into the project, and will they understand it? I'm not too sure. Again, don't hate me for saying a 4x increase from the market, from the top of the market. So in my opinion, this is my estimated price prediction for Aleph Zero come mid-2025, okay? So again, it's probably going to be higher than that depending on all those sort of variables I mentioned to you in the market cap. It could literally be a 30 or a 50x increase in terms of market cap size. I highly doubt it. That's a lot of money, but you never know with these things. So keep that in mind, guys, and hopefully you understand the maths behind what kind of goes into predicting price. And if anyone out there kind of listens to a YouTuber that is a guru on predicting things, just know it's literally impossible to do so. And finally, my overall opinion on Aleph Zero. Now, look, guys, there's honestly rarely a time when I get super pumped for a new project because too often I hear projects coming up promising things that are either impossible or just cannot work due to a given fundamental factor. It could be anything like, the team, the tokenomics, investors, or lack thereof, technical details, or any one of those combinations. But I'm quite pleased with Aleph Zero thus far. Now, some criticisms which I like to give would be a fairly inexperienced team working in crypto. However, again, they seem to work well together. We have the investors that are, again, quite shitty. However, the funding amount is quite high, which is about 16.5 million US dollars, which at the same time is kind of all you need for young entrepreneurs wanting to make a name for themselves. And at the same time, the strong and quality investors will come when Aleph Zero begins to show signs of life. At least that's what I expect. Now, in the same regard, speaking of signs of life, there were reportedly 1,000 smart contracts written on the testnet, which is super cool. Although I must say that doesn't technically mean that there were 1,000 dApps built either. But in saying that, there actually are around 5 native projects that will launch on Aleph Zero mainnet, in addition to Liminal when they're able to do so. However, the team have mentioned that they are focusing on the testnet right now, which I would assume kind of means that they're confirming everything is working succinctly. Now, 5 native projects isn't that bad of a start in my honest opinion. There are definitely projects out there with far larger market caps that only have a few more or even equal to that amount of native dApps, even after a year or two of mainnet. But one of the worry I have is that the new technology will be quite difficult to implement, as they're also dealing with ZKPs and SMPCs, as I mentioned to you earlier. However, at the same time, nothing is really impossible, especially with the remainder of the very qualified 37 team members who I didn't have time to discuss. Now, when Liminal launches on the mainnet, this will provide a fantastic opportunity for Aleph Zero to be used as a privacy-enriched environment for many other Layer 1 protocols. And I do think that there is a need for Aleph Zero in the ecosystem as a high throughput, privacy preserving blockchain that offers interoperability among other layer 1 chains and offers businesses the opportunity to leverage a public or private environment. And at the same time, since they're also working on ways to build a fully carbon negative network through purchasing carbon credits, I think this project is going to be a standout from the crowd coming into the 2025 bull market. Now, with everything you can possibly think of considered, including my worries, I honestly would rate Aleph Zero an 8 out of 10 in terms of potential. However, guys, it all depends on adoption, so we'll see what happens as the team executes on their promises. With that being said, thank you all for watching this video, sticking through right to the very end. And this is not a paid promotion. My last video, everyone asked me if it was a paid promotion. No, I have not been paid or even contacted by the Aleph Zero team. So thanks all for watching, guys. I'll see you all next week. Bye. Hey, I just want to stop you really quickly and thank you so much for watching this video. If you'd like to see the technical breakdown of this project, please click the link up there. And if you want to see a whole new review altogether, click the link down there. If not, make sure you're subscribed for future interviews and reviews. And until then, guys, thank you so much. See you soon.